Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Well, Nike stock now down 11% in late trading. Nike reported quarterly revenue of $13.39 billion. Now, that was roughly in line with analysts' expectations, but the company said it sees a softer second half revenue outlook. And this comes as sales in the Greater China region came in lower than expected for the current quarter. We heard from Bloomberg's Red Brown.
Nike's been kind of playing this dangerous game, if you will, where a lot of their growth is really heavily reliant on China when their sales in Europe, their sales in America, their bigger markets have really slowed down. So with those sales numbers in China coming in a little bit below expectations, I think that is a little bit of a worry for the company when they do have such an outsized importance for Nike.
That's Bloomberg's Red Brown. Nike also said that it's looking for as much as $2 billion in cost savings as it streamlines operations. The sportswear and sneaker giant said it would incur restructuring charges of $400 to $450 million in the current quarter. And again, as we speak, Nike shares down almost 11%. Doug?
Well, there are more problems on the horizon for Apple after the company lost that patent dispute over a blood oxygen sensor on the Apple smartwatch. Here is Bloomberg's Tom Busby.
As part of that patent dispute settlement, Apple today stopped selling the Apple Watch Series 9 and the Ultra 2 on its U.S. online store, and it'll have to stop selling them at its 270 physical U.S. stores this coming Sunday. Apple Watch SE models that do not have the ability to measure blood oxygen, those are still on sale. But in another potential problem, at least for Apple customers, the company is also no longer repairing older smartwatches that are now out of warranty. Tom Busby, Bloomberg Radio.
Boeing is getting a break after being shut out of China's aviation market for the past 4 years. More from Bloomberg's Tracy Junkie.
There's a lot riding on a Shanghai-bound flight that took off Thursday from Washington State, and we're not talking passengers and luggage. The jet is a brand-new Boeing 787 Dreamliner, and it's the first to be delivered directly to China since 2019. The Chinese government, by signing off on the delivery, may be signaling an easing of strained U.S.-China trade relations. And it's a breakthrough for Boeing that could next lead to the first 737 MAX deliveries to China in 5 years. Tracy Junkie, Bloomberg Radio.
Well, speaking of U.S.-China trade relations, today the Commerce Department said it will begin gathering information on Chinese production of legacy semiconductors. Now, this follows news on the Biden administration possibly raising tariffs on Chinese electric vehicles and other goods. Here's Bloomberg's Brendan Murray.
It's just a good reminder that these trade war sort of skirmishes can flare up at any time. And particularly, the Biden administration is under a lot of pressure from Congress right now to get tough on China. So they're playing to that constituency as well, heading into election year next year.
That is Bloomberg's Brendan Murray. Now, the Commerce Department is trying to track just how deeply reliant American companies have been on U.S. chip technology from China. The department will survey more than 100 corporations in auto, aerospace, defense, and other industries on how they obtain and use these legacy chips. By the way, that process will begin in January. Brian?
And in the meantime, China says it will halt exports of some rare earth processing technology. That story from Bloomberg's Joanne Wong in Hong Kong.
Beijing has put technology for making rare earth metals and rare earth magnets on a list of items that can't be transferred overseas. This is according to a document from China's Ministry of Commerce. While the new rules don't affect shipments of rare earth products themselves, they may be intended to frustrate efforts to develop the industry outside China. Western producers could face more technical challenges in developing refining processes that China has come to master. And U.S. government figures show China accounted for more than two-thirds of mined rare earths last year. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
And after 16 years as a member of OPEC, Angola is leaving the cartel. The story from Bloomberg's Charlie Pellet.
It comes as OPEC is trying to boost global prices. Luanda had rejected a reduced output limit imposed by the leaders of the cartel to reflect the country's dwindling capacity. While the superficial blow to OPEC's unity briefly weakened crude prices, the split will not impact oil supplies from the country or the organization as a whole. In New York, Charlie Pellet, Bloomberg Radio.
All right, now it's time for global news. At least 15 people have been killed at Prague's famed Charles University. Ed Baxter with that story and more from the 960 newsroom in San Francisco. Ed?
Yeah, that's right, Brian. Officials in the Czech Republic say the worst carnage of its kind in Czech history. Interior Minister Vít Rakusin says there's no evidence that the shooter has any links to the international terrorism. He says the shooter killed himself at the end of the rampage. No motive announced. Shootings in the country are rare because it limits access to firearms by requiring gun owners to pass written and practical tests as well as psychological screenings. Former mayor of New York turned faithful and dutiful Trump aide Rudy Giuliani has filed for bankruptcy after being ordered to pay $148 million to two 2020 Georgia election workers for promoting conspiracy theories. He has now filed for protection. Bloomberg's Jeremy Hill says it stops all litigation.
A federal judge is brought in to oversee your situation, and he'll get a chance to negotiate with his creditors about the best way to divide up his assets.
And Jeremy says his assets don't go that deep.
The first thing that jumped out is just the gulf between his assets and his liabilities, right? He says as much as $500 million in debts and no more than $10 million in assets. So there's just no way that he's going to be able to repay all the debts that he owes.
And debtors get to stand in line. This while Trump legal team prepares its filing for the U.S. Supreme Court to try to overturn the Colorado ballot decision. There's an interesting question coming up tied to the ethic issues of Justice Clarence Thomas. Will he recuse himself? Bloomberg's Daniel Flatley.
Some of the scrutiny that Justice Thomas has already come under, plus the questions of how he would be potentially influenced by his wife, who was very involved in the Stop the Steal movement, texting with Chief of Staff Mark Meadows and various things like that.
Yeah, now Dan says whether he will actually do it is still a question. U.S. Air Force says it is keeping Taiwan's defense in mind, even with the Middle East and Ukraine getting the bulk of the attention. Bloomberg's Nathan Hager reports from Washington.
About 24 House Republicans are raising concerns about Taiwan's air readiness. They say a program to modernize the island's fleet of F-16 fighter jets is almost 3 years behind schedule, while software issues have delayed deliveries of 66 new aircraft from Lockheed Martin by more than 15 months. This week, Assistant Air Force Secretary Andrew Hunter told the lawmakers there are only 3 existing jets left to retrofit, and those 66 new planes should be delivered by the end of 2026. In Washington, I'm Nathan Hager, Bloomberg Radio.
Meanwhile, General Charles Brown, the chairman of the Joint Chiefs of Staff, has now spoken with his Chinese counterpart for the first time. The Biden administration has billed it as a further sign that ties between the two countries' militaries may be getting back to normal, but China's Defense Minister Liu is saying that while better, U.S. needs to respect China's sovereignty and interest in the South China Sea in order to safeguard regional peace. Global news 24 hours a day and whenever you want it with Bloomberg News Now in San Francisco. I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis, along with Paul Allen in Sydney. And we have now Poonam Goyal with us, senior U.S. e-commerce and retail analyst at Bloomberg Intelligence, to take a closer look at Nike earnings. So a number of items here. Nike looking for a lot of savings, cost savings, dismissing workers, something like $2 billion worth, and talking about expecting a little bit weaker performance in the latter half. What is it that's kind of got investors riled up here? This stock is now down around 11% in late trading, Poonam.
Hi, yes, I think the stock being down 11% happened just as they issued guidance for the full year and reduced it, largely due to 2H weakness, as you called out. I think the third quarter, where they expect guidance to be weaker as a function of tougher comparisons. We saw that in 2Q, they are up against very tough comparisons. But it's really 4Q that was more of a concern, where comparisons do get easier, but they're still only expecting revenues to be up 1%. And that's a function of two things. One, an uncertain macro, and two, weaker China. So those two things together is what's raising brows here, because China, as everyone knows, is a real area of growth for them. And the consumers are out and about shopping there. So why so much skepticism? Could they be conservative here? Could they just be lowballing? Perhaps, but still, it is cause for concern.
We've also had the CFO, Matt Fran, talking about, quote, disciplined cost management. Is that code for more cuts?
They've been cutting for some time now. So with this new cost-cutting plan, $2 billion of savings over the next 3 years cumulatively, I think they probably have rounded out what they can cut. Should conditions get weaker beyond what they're expecting, should China not be able to grow as fast as they have expected, could there be more? Absolutely, down the line. But I think, this new plan that they have in place probably takes care of a lot of it.
What's the situation with inventory at the moment?
Inventories are actually in great shape. That's the one thing that I think was a silver lining here, where we saw inventory being reduced significantly, in fact, down 14%. So that's the silver lining here. Gross margins, as a result, could be healthier. And we saw that in the second quarter. We saw that their gross margins were up quite nicely. And that's really what helped on the operating side.
So you mentioned that lackluster demand in China and some uncertainty about their outlook there. How about some of the other markets? And we often talk about India as an emerging market for consumer strength, a wealthier consumer. What are some of the other markets that might be a bright spot for Nike?
Yeah, I think the Asia-Pacific market outside of China is doing well. We saw that in the results that they reported today. And it is promising, that market, because there is a rising middle-income class, especially in India, where there is definitely a large population as well as income growth. So that part of the market is doing well. Another part of the market that isn't doing well is EMEA. We saw weakness in EMEA, and it's a country or a region that they called out that could see further weakness, which is part of the reason for their weaker guidance into their fiscal 2H.
I wonder whether competition is affecting this to a certain degree with Nike, particularly in light of geopolitical tensions between the U.S. and China. And, there is a streak of nationalism in China that sometimes drives consumers to buy local, buy national brands.
We had heard about this competition taking, basically putting a lot of pressure on Nike and some of the other U.S. brands, let's say maybe a couple of years ago. I don't think that's the case right now. I haven't heard that being the problem for why results could be weaker. Though, could those tensions emerge once again down the line? Possibly. We have seen it. But I do think when you think about Nike and you think about the global sportswear industry, Nike has a clear lead, especially in footwear. And we think that lead is probably here to stay. Now, on the apparel side, there's definitely growing competition. Nike talked a lot today about the women's market and how they're aiming to gain share there with innovation and fit, and that's encouraging. But so is everyone else. So is Adidas, so is Under Armour, so is Lululemon. There's a lot of competition on the apparel side, so it's anyone's game there.
So what's been some of the analyst reaction to both the results and the earnings call?
Well, I can tell you what my reaction is, which is that near term is definitely challenged. But I think the longer term, as they put out this $2 billion cost savings plan, and as macro conditions do normalize at some point in the next 12 to 24 months, Nike remains a dominant player in the industry. And we think that the long-term potential for Nike is still very much intact.
I'm curious about the tone of the top executives, like the CEO, John Donahoe. Did he sound upbeat longer term? Did he express anything that made you think, well, this is just a minor setback. These guys are ready to play?
I think, what encouraged me the most on the call was the fact that they continue to harp on innovation. I think it is one of Nike's strengths, especially in footwear, and their partnerships with key celebrities or key sports players, where they do dominate. For example, whether it comes to Jordan becoming the second largest sportswear brand, or even, with LeBron and some of the other athletes, Sabrina Williams, etc. They do have the top athletes sponsoring Nike and endorsing Nike, which has done Nike well and served Nike well, and we think will continue to be a driving force for them into the next decade.
All right, Poonam, thanks so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.